Welcome back, everyone. Thanks for joining us for the mid-February 2025 update on the HFRX. Here with us today is Ken Hines, President of HFR Index. Welcome back, Ken.
Thanks for having me on.
So, Ken, will you please give us a rundown of how things have looked so far in February?
Yeah, the first half of February was exciting because we saw the evolution of some of the drivers of performance, continuation of some things from January, and then some new drivers emerge in the first part of February, really as a result of everything you see going on. And what's interesting is that hedge funds not only did a good job of navigating this environment, but at the same time, we saw the leadership of strategies sort of switch around, and you actually saw macro funds, uncorrelated macro funds, move into the leadership position after trailing in January and throughout 2024, whereas the directional strategies, which did well in 24 and in January, did not do as well as macro and relative value in the first half of February.
Okay, so let's look at the data for the composite indices.
Yeah, I think the biggest trend that we saw emerge is the shift in the sort of macro drivers of performance, really a continuation of a lot of the same new Trump administration trades that have been going on in terms of a very favorable disposition towards business, lighter regulation, pro-business policies. But I think what you've seen, we've seen a continuation of that in January. But what's changed is that you're starting to see some uncertainty creep in as an extension of all these things. People know that these things are happening, and they think there's a positive effect on things like M&A, but there's also an uncertainty that's being introduced with regard to trade tariff uncertainty. What impact is that going to have? What type of inflation is that going to have? Immigration impact. What impact is that going to have? Is that going to be inflationary? And also a lot of the government cost cutting. I think that's a good thing, but I think that managers are navigating an environment where that is introducing some uncertainty as to what's going to happen. And that's really that's the environment you see hedge funds navigating here through the middle part of February. The leading area here, as you can see, HFRX Market Directional Index, same as January, up about 78 basis points. And here you can see that compares with U.S. equities, which are only up just a few basis points, really flat for the month in the first half of February. But as I was said earlier, macro index moved to the leadership. We always refer to it as uncorrelated macro. And we'll talk a little bit about the sub-strategy. We go to the next slide. You have both macro and then our fundamental and systematic trend following strategies there. So that moved into the leadership, about a 40 basis point gain for relative value arbitrage. As you know, that's fixed income based credit multi-strategies. HFRX Global, like Market Directional, is just a roll-up of the strategies, just a different weighting of those. And then you see, as I referred to earlier, event-driven and equity hedge, both gained for the month a little more than 30%, topping U.S. equities, but really the lower end of the four strategy performance for the month.
All right, so at the sub-strategy level for the month so far, how are things looking?
Yeah, so we saw a continuation. Convertible arbitrage was a strong area of performance in 2024 and January of this year. As you know, that's a long bond, a short stock, a long volatility position, and it's a long option position all at the same time. That was the strongest area, up 115 for the month. We talked about macro previously, and you can see when you drill down to the sub-strategies, it wasn't the systematic trend following, it was the macro fundamental discretionary managers, which gained about 0.7% in the first 2 weeks of January. Equity market neutral, again, another strong month as you saw a mean reversion, a lot of the factors in what amounts to very sort of dollar neutral, beta neutral, market neutral portfolios. And then finally, merger arb. We talked about this earlier and how there's a lot of positive optimism about the M&A environment. It's kind of interesting because there's a lot of optimism. We haven't seen a lot of the deal flow that people are expecting materialize yet. And I think a lot of that comes back to some of the uncertainty I think people are expecting lighter regulation, but they're also uncertain about some of these other things: immigration, the cost cutting, and the trade tariffs has introduced some uncertainty. So we still are expecting that strong M&A cycle, just maybe pushed back a little bit further into 2025.
Okay, and even though we're just a month and a half in, how are things looking year to date?
Yeah, so I think in this respect, you see a similar profile as what we saw in January. Market directional up three and an eighth of a percent, and that obviously we have here U.S. equities 473. Of course, that was almost entirely in January because we know in the first half of February really haven't seen much gain there at all. And so market directional, the leading area, again, that's all four strategies weighted differently than the global. Equity hedge, the leader in January, the leader in 2024, up nearly 2.5%. Nearly 1.5 for the overall global, which, as you know, is all four strategies. And then you see fixed income based relative value up 1 1/3 and a little better than 1% event driven. And then macro, even leading the first half of February, but was essentially it was essentially flat in the month of January, and so that's why it's the lowest of the four in the first 6 weeks of the year.
And what can you tell us about the changing composition at the sub-strategy level year to date?
Yeah, you can see here kind of a mix, blending of the trends that we saw in each month. Obviously, in January, it was fundamental growth equities for sure, 3.125%, very strong there. Convertible arbitrage, leading area in February, bringing it to 2 7/8. I think that was also strong in January. So really a combination of the trends for both months. You've seen, I think it's a similar market cycle, but it's also a slightly evolved market cycle. You have some shifting of the trends, some shifting in the leadership, and then fundamental value. Obviously, one trend has been the broadening out of the equity market, gains from the magnificent seven large cap tech to something much more to include small cap and other areas, financials and healthcare and cyclicals and all those things all coming together. And you see some of those coming up in the fundamental value, and then certainly equity market neutral, as you do see some of those mean reversions take place up 1.9%.
Well, that's great. Thank you for taking the time to be with us today. I encourage all our viewers to visit our revamped website at hfr.com. And when you're there, be sure to check out the Investor Guidebook, which walks you through a number of use cases of the HFR indices. We have an extensive number of indices at over 500. Please do visit and subscribe to our YouTube channel, where we do index updates as well as special reports and podcasts. And if you need to reach out to us, please email at indices@hfr.com or contact Ken Hines directly for more about the indices. Thank you so much, Ken.
Great, thanks.